Yes, we are recording. So yeah, I just want to repeat that webinar series because like I promised, I said we are going to be doing this sometimes, all right? So I want to appreciate everyone that is here for taking our time to participate. But before we jump right into the business of the day, I just want to confirm if I'm not speaking to myself, all right? So I will I see some hands raised. I see Mark of Dale at the top. So I'll just unmute Mark of Dale. I'll allow you to speak. So go ahead, unmute your mic, sir. And I just want to confirm if you can hear me before we proceed. If you can hear me and you can see the sound of my screen, please. And you can see the sound. Okay. I can see hi Manu. You've been allowed to speak. Please just I would like to know if you can see my screen and you can hear me. See hi Manu. I just want to confirm, before we continue. To be able to speak in case you're trying to, you need to unmute your mic. I'd just like to know if you can. Let me try Sir White. Sir White, you've been allowed to speak. Unmute your mic just to confirm if you can hear me. And you can see my screen. Sir White. Okay, go ahead, Imano. I notice you're muted. Go ahead. Confirm if you can hear me and you can see my screen. Quickly. Okay, let me try Alani. Alani, on mute. Let me know if you can see my screen and you can hear my voice.
I can see the screen and I can hear your voice.
Okay. Good. That was all I needed. Thank you, sir. So, yeah, let's go on. So today I want to talk about the money you left on the table if you were trading gold. All right. And I'm going to be using the replay tool on this Go Chatting software to simulate real price movement. All right. But first of all, I think the hidden nature of this topic is about market structure, which is something that we are familiar with, right? But there's a way I use it personally, and I'm just going to briefly explain, all right, before we go into the chart, so that when I go to the chart, you'll be able to understand exactly what I am doing. But before I continue, let me just reconfirm one more time if I'm recording. Yes, I am. All right. Let's dive in. So first of all, we already know that basic information about market structure. In a bullish market structure, price is expected to create continuous highs, higher lows, higher highs, higher lows, higher highs, right? The reverse is the case if you're trading, if the reverse is the case rather if you're in a bearish market, and in a ranging market, price just moves sideways, bouncing off areas of support and resistance, right? That's popular knowledge. Now, let me dive a little bit deeper on how I use market structure personally to place trades. All right. But let's just continue. Now, this is what I usually do, right? In a bullish market structure, when price starts from a lower point, because that has to happen, right? Then goes on to create a higher low. At this point, we don't know what's going on, right? At this point, we don't know what's going on. We don't know if we're in a bullish trend or we are going to continue the bearish trend. Let's say the preceding trend was actually bearish, right? Now, when price creates this higher low, at that point, we don't know if it's a higher low yet until price goes on to create a new higher high. Then this is a moment you want to be like, aha, okay, I know what is going on. This is now a bullish trend, right? Now, where do I buy from? where do I buy from? Because as traders, we want to have the ability to make choices, right? Those on the mentorship program are familiar with this analogy. I always mention this. We don't know what's going to the outcome of a trade on a trade by trade basis. So what do we do? If you have a system, operate within your system. You as a trader should know where you want to take action and what amount of risk you want to put on that particular trade. All right. That's the only thing you can do for yourself. Then when you get in, let the market do its thing, because you don't know if that trade is going to make its way to take profit or to stop loss, right? But when you have a system that you've back tested, you've seen that it's profitable historically, you know that yes, after 5 trades, after 10 trades, I should be profitable, if you get my point. Now let's continue. So using this, the way I use market structure, when I now have, since the case scenario, the scenario I'm trying to paint here is a bullish market structure. Now that we have a new higher high, where do I want to buy from? This would be the first area I want to buy from. Let me label it first area. Let me I think I can add text. First buy area. Let me make it a little bolder. Maybe I'll make it 20. All right. That will be my first buy area. That means I will be expecting price to pull back into that area before I buy. I usually have 2 buy areas. Then I wait for confirmations, right? So I'll show you the second buy area. So the second buy area will be below here, and then I'll label that second buy area. Okay. Now, if price, let's say for whatever reason, I was expecting to see price pull back into my first buy area, the mistake many people make may not be a mistake if it works for you, but personally, I like to wait for confirmations, right? And I'm also going to talk about the confirmation real soon. Now, when price pulls back into the first buy area, I'm not just buying blindly. I'm waiting to see if price is now willing to continue the bullish trend. And if I don't get that confirmation at the first buy area, I will wait at the second buy area. So now some of us may be wondering, why not just sell if you were expecting a pullback? Well, I wasn't. I'm bullish minded. That's my bias at that particular point in time. And that's what I'm focused on. So I don't want to sell, because for all I care, this is now a bullish trend. Price may not sell into my first buy area and just continue trading to the upside. So I've made a decision that, hey, I have a first buy area, I have a second buy area. If price doesn't give me a bullish confirmation around these areas, and then price eventually breaks below the second buy area, then the trend has changed. Right? The trend has changed because I now have a new lower low. Price just broke out of the previous low here. So now I'm now a seller. I wait for price to pull back. Then I want to look for bearish confirmation to continue selling to the downside. All right. But let's focus on my bias and the possibility of it playing out. So what I'm talking about now is when I see a new higher high created, since we're using a bullish scenario, I want to wait for a pullback into here and wait for my confirmation. If I don't get it here, then I want to see if we're actually going to go for a deeper pullback. Then I'll get my confirmation at the second buy area. So now that we've taken the rules out of the way, let me show you if those on the mentorship program, because I can see some of us here. I think Mark of Dale is here. Where's the Mark of Dale? Let me see if I can see some of them here. Okay, yeah, I can see a few of them here. All right. So they know this already. So I won't go into details on all of that. So let's just see how we would have applied this, because we talked about this in the mentorship program in details, but I just want to give you a snippet here and it can be helpful to you. All right. So let's go to gold. As a matter of fact, let's start from January on gold. So to do that, I'll come to the go-to section here. Let me see if I'm sharing my screen. Okay, yes, I am. So I'll go to the go-to section here. I'll click on that. And then I'll go to January, the 1st of January, and I'm going to click on apply. So which means this is the first candlestick for January right here, where my mouse is. That little hand pointing upward. All right. So I'm just going to put a vertical line there so that when we go to a lower time frame, we'll be able to identify that area. All right. Or what am I even doing? Let me remove that and cut it out. I'll use the replay tool and cut it out. Good. Meanwhile, let me remove these lines here. Delete drawings. Good. All right. So now this was the last candlestick for December, which is last year, the last candlestick for the year, the last daily candlestick for the year. So I'll just go to the 4-hour time frame. Let me see if this is still the, okay, this is today's candle. Let's give it a moment to take us to where we want to be. Okay, good. Or sorry, let me go back to the daily time frame. Let's go back to daily. Give it a moment to load up. This happens on Go Charting. It doesn't happen on Trading View. So, all right. So now on this daily time frame, around here, price was in a bearish trend. Price created a new lower low. Price went for a pullback into our first sell area. Of course, gave us 2 days of bearish price action. So if you sold from there on a much lower time frame, you of course you made money. All right. So I'll go ahead and hit the play button. So we can see that everything has played out already because we talked about this, like I said, last month in the mentorship program while it was still happening, but it has already happened. So let me just go ahead and hit the play button and show you what I'm talking about. So at this point, we just created a new higher high. Can you see that? We just created a new higher high. If you cannot follow, let me use my path arrow to simulate this. Good. So you can see from this point, we created a high. We don't know what was going on. We created a higher low. Probably we're still confused of what's going on. But now we have a new higher high on this daily time frame. So we already know what we are expecting next. We are waiting for our first buy area in a bullish trend and our second buy area. Anything below the second buy area, the trend has changed. We want to continue selling because obviously at that point we now have a new lower low. All right. But we cannot take advantage of this trade on the daily time frame. Now we know what we are expecting. We know what we want to see, right? We want to see price either pull back into the first buy area and take off, or the second buy area before we take off. All right. So now that we know what we are expecting, I'll delete this arrow, then I'll go to the 4-hour time frame. As if maybe you're still not consistently profitable yet, I'll advise you stay on the 4-hour time frame because the lower you go, the more the noise. All right. What I mean by noise is you see a lot of fake outs and all of those things, and you may get tricked into getting early and maybe hit stop loss. Even though you're right about the trade, you may hit stop loss before price decides to move. All right. So now from the daily time frame, we've been able to pinpoint our first buy area and our second buy area. So now we are waiting for pullback and a confirmation. Now I've not talked about the confirmation. I will just give one confirmation here. All right. We have multiple confirmations, but let me just give one of the most popular ones. Let's just look for a bullish engulfing candle. So why do I love bullish engulf? I love bullish engulfing candles a lot. We don't hear your voice on the webinar. Oh, someone is saying that they are not hearing my voice on the webinar from a personal DM. Let me unmute. I can see Uncle. Uncle's hand is raised. please, if you've been unmuted, try to unmute yourself and speak. All right. If you can hear me, please confirm. I can see that my mic is moving, so
I can hear you
if you
very
can.
well.
Okay, good. Thank you, sir. So someone just confirmed that they can hear me. Give me a moment. Let me just reply this individual. Drop off and rejoin. Others can hear me. Others can hear me clearly. All right. Good. Let's continue with the class. All right. So I love engulfing candlesticks a lot. Why? Because some people prefer to use the volume indicator, blah blah blah. It's not wrong to do that. But personally, I love engulfing candlesticks because by the size, you shall know them, right? The size says it all. It's the size of the candlestick, but the fact that it engulfed the previous candlestick tells me what I need to know. All right, that means I can see more commitment. If my bias is to buy, that means I'm beginning to see more buying commitment, which is what I actually wanted to see. You get the point. So that's why I love engulfing candlesticks a lot. That's my favorite candlestick pattern. All right. So now we want to see if price is going to pull back into our first buy area. Let me even make this area as a zone. All right. Let me make those areas a zone. There are no right or wrong ways to do this. The most important thing is to focus on major swing points. All right. So that's just the major rule you need to know when it comes to drawing these areas of support and resistance. All right. So let's go on, and I'm on the 4-hour time frame, by the way. So let's see if we're going to get a confirmation around our area. Now, price has come into our first buy zone. Now, if I get a bullish engulfing candlestick here, whether I lose the trade eventually or I win, at that point, it doesn't matter. But I can see that price is still struggling. Now, price broke below the first buy area. Can you see that? So which means my eye is at the second buy area below. Or if the next candlestick breaks back above my first buy area, then the trade is still active. Now we got a bullish engulfing candle from here. You can see that it broke back above our first buy area. So it's an active trade. This is where I want to take action. At this point, do I know if this trade is going to be a winner? I don't. I could choose to put my stop loss here or here. Now, where you choose to put your stop loss is also based on your discretion. All right. I'm not here to talk about that. So, and I love 2-to-1 a lot. I explained this, was it yesterday, when we talked about risk to reward, blah, blah, blah. I just love 2-to-1. Why? It's just a personal preference. All right. Am I leaving some money on the table? Many times I do. Yesterday, we left some money on the table. Those in the afternoon session, we took a trade. I went for 2-to-1. The price went to 5-to-1. And as a matter of fact, let me digress a little bit. I'm beginning to fall in love with gold so much, but that's a story for another day. All right. So where you decide to put your stop loss is up to you. You can put it below the swing point. You can put it below the body of the candlestick, and then you go for your target. All right. So this is my entry, and then hit the play button. Good. So this is the moment we hit our target, right? This was the moment we actually hit the target, right? So now, let's assume that, yes, you've backed that trade. Let's go back to the daily time frame. Let's go back to the daily time frame, and I'll double click on this trade and limit it to the 4 hour time frame. Good. All right. So now we can see that, hey, we created a new higher high. We waited for the pullback. We took advantage of this on the 4-hour time frame and we hit our TP. All right. Now let's hit the play button. We want to see a new higher high created again because we just had a high, a higher low, a new higher high. We anticipated a pullback. We took the trade. We won the trade. Lucky us this time because you are not always going to win trades, right? So let's see. Price continued higher. Oh, sorry. My goodness. Let me just cut it out again. So the moment price went on from here to create a new higher high, we know what we are expecting again. All right. Remember, the rule is when we see price create that 1, 2, 3 formation, something like this. 1, 2, 3. Our first buy is this zone. Our second buy area will be this zone here. Anything below the second buy area, I am now considering a sell because the trend has changed from bullish to bearish. All right. So now that we have this new higher high here, because obviously price is trading above, where's my arrow? Let me show you in case you can't see it. We started from a low point, we created 1, 2, 3. All right. So now we are anticipating a pullback. All right. So now we are anticipating a pullback into where? Area 1 and this other section. Let me delete this lower one since we've used it, since that's expired. This lower area will be our second buy area. Anything below the lower section here, the trend has changed for me. That's how I use market structure. All right. So now we're anticipating a pullback into the first buy area or the second buy area, right? So price continued higher, obviously. We already know where we are expecting our pullback to come into. So let's go to the 4-hour time frame. Let's give it a moment. This thing stalls sometimes when you switch across time frame. Okay, yes, here we go. So now I could now create a zone around here just to capture multiple points. Okay. Once again, how you plot your zone is totally up to you. The most important thing you want to take into consideration are the swing points. All right. This is a swing point, price rejected there. This is another swing point. I mean, we can see how price reacted around that area. All right. So let's, of course, automatically this becomes our second buy area, right? All right. So let's hit the play button and see if price ever came into our area. Now that price is in our area, we are waiting for an engulfing candlestick pattern to pull the trigger. You know why I love trading with rules? Because it helps me, how do I put it, have a statistical calculation about the system I am trading. Today, the essence of today's webinar is just so that you can take advantage of my weekly analysis. All right. I have different execution mode. I even rarely trade this. I have other strategies for those that are on the mentorship program. You already know this, but this is just so that you can take advantage of when I say pullbacks, you should be able to look for the first area you want to buy and the second area you want to buy from, or the first area you want to sell and the second area you want to sell from. Time will not permit me to go into the bearish scenario. So everything I'm applying to this bullish scenario, just flip it and apply it in a bearish scenario. All right. So now that price has pulled back into this area, why am I waiting for a confirmation? You know why? So that I won't be a guesser in the market. I want to trade a system. I want to operate within a system, because that system is what I've back tested and built a system around that gave me that statistical advantage in the market. All right. So let's go ahead. I'll hit the play button. Price came back into that zone. This is the moment we got the bullish engulfing candle. So are we going to lose this trade? Are we going to win? At this point, you don't know. You already made some money from here already. So even if you take a hit here, it's fine. And if you're the kind of person that likes to go for higher risk to reward, this would have even given you way more money to even cover for a single loss. This would have given you way more money, about 4-1 already, before this pullback happened, right? But for me, I'll just stick to for the purpose of today's lesson, I'll just stick to the 2-1 that I love so much. So now here's the confirmation. I'll go in again. It's a long position at the close of the 4-hour candlestick. I'll pull my stop loss. This is easy, below the zone. Then I'll go for a 2-1. Don't worry, the session is not going to be too lengthy. After this, I'll just take one more example. Then you can go practice this on your own across any other pair. All right. So I'll hit the play button now. So this is the moment we hit TP. All right. So the most important thing here is this is not just guesswork, right? In the beginning, I broke it down for you. I broke down the rules. I said, in a bullish trend, just for emphasis sake and for the sake of those that are joining late, right? In a bullish trend, when price does this, you don't know what is going on. When it gives you the higher low, you still don't know what is going on until it gives a new higher high. This is the moment you now have a valid trend to work with. Now, you are not buying at the top here, because if you buy at the top here, I consider that FOMO, fear of missing out. That's why you are chasing price. Why not just wait to buy at a cheaper price? So I would do that by waiting for price to pull back into the first buy area, which once again is here, or the second buy area, which is here. So I want to see this bullish engulfing candle as a confirmation at this first buy area or this second buy area. That's the rule. Simple and straightforward. On the daily time frame, go and look for this market structural move. On the 4-hour time frame, then you want to take advantage. Well, you can go to lower time frames on your own when you are back testing this. Maybe look for this change in market structures on the 4-hour time frame. Try to see how you can take advantage of them using these same rules on the 1-hour time frame. You could do that. So just don't be rigid. You're rigid. You can adapt, be flexible, try to study, try to figure things out on your own. So I'm not the kind of person that will tell you, hey, this is the only way. I don't veto stuff. So right, be flexible and try out new things. It's okay. That's the only way you can learn, right? So now you can see that another 2-1 in the bag. All right. And if you go on and on, you will see this thing play out since even in the bearish scenario. Let's even look at more recent price action, right? Let's look at more recent price action. I'll come here. All right. Though this happened, okay, yeah, this is slightly different though, because I did this on a much lower time frame in my weekly analysis. So I don't want to overcomplicate things because we don't have time, right? You can see if you watched my last week video, I said, hey, I want to see price break below. I had a zone here. You can go back and watch that video. I had a zone here. This price break below it, come back for a pullback, and then we sell. Okay, this doesn't apply in today's class because what I'm talking about today, I want it to be as straightforward as possible. Like I said, there are more complicated aspects to this that I need time to break down, and not just in one single session. It takes time and all of that. But sorry for bringing you here. I thought this happened on the daily time frame. So as a matter of fact, on the daily time frame, we are yet to see a new lower low, right? I know some of you may want to say, hey, the new lower low already happened around here, when price closed yesterday like this. But for me, I would like to see that new lower low, around here, right? Until price does this, if I'll assume that, yes, we now have a new lower low, if I'm using this system I'm teaching right now. All right. So, well, since I didn't get it here, let's just take one more example before we call it a night, right? So I'll go back to where I was. I'll cut this out. All right. So as you can see, we hit TP around here. We hit TP around here. And what did you notice again after hitting TP? You can still see that nice wave of bullish price action, right? Price created a higher high, breaking above here, right? Came back for a pullback, which was where we took the trade. Went on to create a new higher high after hitting our TP. So we know what to expect again. Where this becomes our first buy area. And this becomes, let me delete this. And this is our second buy area, right? So we know where we are expecting a pullback to come into now. So let's go back to the 4-hour time frame. Let's give it a moment to load up. Good. So now we know that, hey, these are the areas. Let me delete this third one below here. So we already pinpointed our first buy and our second buy area, right? Let me reconfirm that on the daily time frame. Give it a moment. Okay. Yeah. Fantastic. Let's go back to the 4-hour time frame. All right. So we now have secured that higher high on the daily time frame. So I'll just come here. I'll put a zone around here. Once again, you are just looking for major swing points, right? You're only looking for major swing points. So let's see if we got an entry. Okay, price is in our first buy area now. Boom. That was our bullish engulfing candle. Let's see if we blew this trade or we actually did hit DP. All right. So usually, like I say, I love 2-to-1s. Right. Good. So I hit the play button. I'm going to increase the speed a little bit. Good. Look at how price went on to hit our TP. So guys, this is not rocket science, all right? You can figure this out yourself. The rules are clear. The rules are clear and straightforward. So you just take that rule that I just explained and try to go and apply it when you want to try this out on your own. All right. Sometimes in a more complicated market, when the market is not giving that smooth bullish trend, most often than not, you will get not most often. Let me put this way. When we are not in a smooth trend, most of in those period, you'll be getting your entry at the second level, the second buy area. All right. And then on some other time, you may get an entry at the first buy area where price will stop you out and respect your second buy area. Whichever way it happens for me, it's okay. I mean, if I use 2-to-1, some of you here will definitely use higher risk to reward, right? So, but for me that prefers 2-to-1, even if I get an entry at my first buy area and I hit stop loss, if it respects my second buy area and I still go for the same 2-to-1, I'll still end up recovering the initial loss. Let's say I was risking 1%, I'll recover my 1% and still make 1% profit. All right. So the rules are clear. Go back and back test this. You can send me a DM with what you find. I'll try my best to answer a few questions. All right. So what is going to happen next now is I'm going to open the floor. I believe we all have questions. If you have any question, just indicate by raising up your hand. I see someone's hands raised, Idako. So pardon me if I pronounce that wrongly. Yes, go ahead and ask your question, please.
All right, thank you very much.
Okay.
Good evening.
Good evening. Kindly tell us where you're joining us from and your name, then your
Right.
question.
My name is Idaku. I'm joining from Morocco, but I'm in Nigeria.
Okay, nice to have you with us today.
Thank you very much. My question is concerning the area, the buy areas, like you have first buy
Yes.
area and then the second buy area. So if
Yes.
because I observed from the back testing the examples you did, if the
Okay.
first buy area doesn't hold and then the market failed to get to the second buy area, you wait for
Yes.
it to, doesn't mean you have
Break
to
back
wait
and
for it
hold.
to break back above the first buy area before,
Exactly.
even when you get your confirmation before the break of the first buy area.
Rules are rules, right? So it's going to help take out the guesswork, and that's the most important thing you should have as a trader. You don't want to be a trader that guesses his or her way around the market. So you want a specific set of rules. Of course, with time, after gathering more confidence by achieving consistent withdrawals, your confidence is strong. You've built this experience over time. You start seeing patterns. You can start making certain decisions. All right. But in the beginning, just to achieve consistency in that particular system, you have to stick to the rules.
All right.
Yes, but I promise that over time, you may need to discard some of those rules and trade more flexibly, because you must have seen that pattern. Because you can pay for mentorship, but you cannot pay for experience. You can attend webinars like this or watch videos and learn certain things, but you cannot pay for that experience. You have to go through it yourself. So when you stick to the rules in the beginning, over time, you start discarding some of those rules and start adapting to things that you've seen play out over and over time. If that makes sense.
Yeah, thank you very much.
You're welcome, sir. All right. I see Mr. Okafor's hand is raised. Mr. Okafor, long time, sir. Good to have you join us today. You need to unmute yourself to speak, just in case you're speaking. So for us to be able to hear you, you need to unmute yourself. Your mic is muted from my end here, so kindly unmute yourself and ask your question. What? Okay.
Can you hear me now?
Loud and clear. Loud and clear.
Okay. Good evening.
Good evening. Nice to have you join us today. For the sake of those that are on the call, kindly tell us your name and where you're joining us from. I know you already.
My name is Mr. Kenneth Okafo.
Mm-hmm.
I'm from Nigeria.
All right.
Yeah.
Yes. Go ahead with your question.
You are my mentor from the beginning. Before you run away from me.
Yeah.
Before you run away from me. So you denied my call last year all around. Even this January, denied my call, which is very wrong.
Hold on, please. Hold on. You said I denied your call.
Yes, he didn't pick my call, and he said I should drop message for you, and I dropped message so many notifications on WhatsApp. You didn't pick.
You did. I remember telling you that was when. Was it not December? That you should drop a message.
You replied the call after that. Now you say you will call me back.
Oh, you did. Oh, I'm sorry about that. I'm sorry. Back then when you were.
up to date.
Oh, really? Then you have
Yes.
to send that call. You need to send that message again because something happened to my other device. So I switched device. So I lost all. I thought I backed it up. I don't know. iCloud just couldn't restore my messages for. I don't just
Okay.
know why.
No problem. No
So
problem about that.
be-
I'm
all right,
very
good.
happy to meet you again. That is just
All
there.
right, it's nice.
Yeah.
Yes, go ahead, please.
You are a very nice man. When we do mentorship that year, so no problem.
Yes, all right.
I
You're
just like
welcome. Go
to
ahead,
express
please.
myself.
Okay.
Thank you, sir.
Oh, I thought you had a question.
No question. This is my question.
All right. So in that
Yeah.
case, just send me a message again then, or this is what's going to happen. You can call me tomorrow by 10, or let's say 12 a.m. because I'll be in class by 10.
Okay, no problem about that.
All right, perfect.
Thank you.
Okay, you're welcome, sir. All right. Institute of SMC, you've been allowed to speak. I saw your hands raised, so go ahead. Kindly tell us your name and where you're joining
Hello.
us from.
Yes, good evening, sir.
Good evening, sir.
Yeah, this is Dennis from Uganda.
All right. Nice to have you join us tonight.
Oh, thank you, sir. Thank you, sir. I'm very humbled for the strategy that you've given it. I'm so happy for it. I'm going to backtest it today night.
Okay, good.
Yeah, and another thing, is there any platform that I can use for backtesting that is free?
Yes, you can use this gochatting.com.
Gochatting.com.
Yes, just go to gochatting.com. I never knew about I think I need to even make a YouTube video on this. It was one of the students, I think the student is also on this call right now, that brought this to my attention about, was it 3 weeks ago? Because I was struggling to make payments on TradingView. So he suggested that we use Go Chatting, and yeah, it works, right? So when you go to gochatting.com right here, over on products, then come to charts. Then when you click on charts, it opens a new tab. Then wait for it to load up, of course. And when that happens, then you want to click on this bar replay tool. You click on it. Then you see this vertical line on your chart. Then just drag anywhere you want to cut, just double click, and there you go. Then
Thank you,
this
sir.
little window pops up. Then you just use the play button. You can play and pause, and you can hit play and let it move on its own. You're welcome, sir. So, yep.
I'm so humbled.
You're welcome.
Yeah.
Welcome. You're welcome. So I see Mr. Eugene's hand up. So Mr. Eugene, you have the floor. To be able to speak, you need to unmute and ask your question. To be able to speak, Mr. Eugene, you need to unmute your mic. You've been allowed to speak from my end. In case you're speaking, because I noticed you've unmuted your mic, but it's not, I can't hear you. While we wait for you, I'll allow Igesa to speak. Igesa, you've been allowed to speak, so unmute and go ahead. In case you're speaking, I can't hear you though. Maybe you have issues with your microphone. Okay. While we wait for Eugene and okay. Why can't I hear him? All right, I'm not seeing any more hands raised, so and we're struggling to hear Igesa and Eugene. Okay, I see Isaac. All right, Isaac, yes. Please go ahead and unmute yourself. Tell us where you're tuning in from, your name, and then your
All right.
question.
Good evening.
Good evening, Mr. Isaac.
So nice to be in the class today. I just wanted to ask. I'm chatting. By the way, I'm calling from Abuja, Nigeria.
All right. Welcome on
Yeah.
board,
So
sir.
I wanted to ask this illustration you've given now. Does
Yes,
it work on other currency pairs too, or is it just for gold?
they do. They do.
Okay, it's a universal like formula that can work for any currency.
Yes.
Okay. Thank you so much.
But just to add to that, I would recommend you go with a currency that moves a lot. So currencies that move a lot are, or let me say asset classes that move a lot are, let me start from the NAS 100, that's NASDAQ, US 30, then let's come to currency pairs, major pairs, all right, major pairs. Then cross-currency pairs, or let me say minor pairs like JPY pairs, right? They also move a lot. And then gold, my newfound love, gold for some time now, gold. Yeah, there you go. So just try this out on pairs that moves a lot, all right? Because when there's enough liquidity, that's when they move, right? So yeah, that's it.
All right. Thank you so much. We'll try it out, sir.
All right.
Yes,
Thank you,
sir.
sir.
Yes, sir.
Yep. Okay, as you can see, JT Money, you've been allowed to speak. Please go ahead. Did I allow JT Money to speak? Yeah. So you need to unmute yourself and then go ahead and ask your question. While we wait for JT Money, I'll allow Landera Towers. Landera Towers, you've been allowed to speak, sir. So go ahead, unmute and ask your question. Landera Towers. Okay. Can't see. Okay. I will just take one more question since those. I'll take Sir White. Sir White, you've been allowed to speak. Please go ahead and ask your question. You need to
Okay, good
unmute
evening.
yourself. Yeah.
Good
Go ahead,
evening.
please.
Can
We
you
have
hear me?
JT. Loud and clear.
Okay. Good evening from Nigeria. My name is JT
Okay.
Money, and I enjoy your tutorials. They're nice, and you're a very good coach. So,
I appreciate that.
while following you, I've been using this strategy, but I've never used it the way you used it this evening. So I said, okay, let me ask a question. What if I come into the market, probably the price has gone above the previous high, and it is retracing back. Let's say while retracing, it broke below the first buy zone, and it is in the middle. And that was when I came into the market, or that was when I opened my chart. And after carrying out my analysis, I saw that it is in between the first buy zone and the second buy zone. Then within there, it now forms an internal structure. That is an internal buy structure again. Should I still work with the pullback for the internal buy structure between the first buy zone and the second buy zone? Or I should just wait for this signal to go, break back above, and wait for a fresh one to come down? Thank you.
That's a very, very good question. You're welcome. So that's a very good question. So what I would recommend is, remember, based on what I talked about today, of course, you can apply this across lower time frames too and see how it works on your own. But based on what I've talked about today, we are drawing inspiration from the daily time frame market structure. So we want to catch it on the 4-hour market structure. So if another structure forms within which will be on the 4-hour time frame within the first buy zone and the second buy zone, which is on the 4-hour time frame. Remember, we got those levels on the daily time frame. We want to take advantage of it on the 4-hour time frame. Now, if price creates a new structure between the first and second buy area, does it make sense if you are actually going with the daily time frame? If you get my point. So on the daily time frame, we already said, hey, this is where we want to buy. These are the areas we want to buy from, first and second. So if another structure forms in between, what guarantee do we have? Except if you are willing to take a larger stop loss. Because for all I care, if price creates a new level in between, price may still eventually go back to that second buy area before it takes off. So if it creates a new structure in between, then maybe it's up to you now to now decide that, okay, I accept using this wide stop loss. But just make sure that your risk management is on point. So if you are someone that risks 1% per trade, it doesn't matter where your stop loss is. Regardless, you're risking the same 1%. So make sure that you I would recommend, if you're not consistently profitable yet, then put your stop loss, because if you're consistently profitable already, then you can figure your way out, right? That's not a problem. But if maybe you are not there yet, then I'll just recommend to play safe, put your stop loss, even if another market structure creates itself between the first and second, then put your stop loss below the second, just so that you're safe.
Okay.
Yes.
Amazing. Thank you. So, and you said the Forex pairs it works good with Euro USD, GBP USD, right?
Yes, the major pairs. Okay. I think we have about, in my own books, I feel like we have about 7 major pairs. Euro USD, yes. GBP USD, NZD USD, AUD USD, USD CHF, USD CAD. I hate USD CAD, by the way. USD CAD and USD CHF, I hate them. Then what's the seventh one? Euro GBP. Skipped my mind. No, Euro GBP. Yeah, it's a cross-currency pair.
It's a cross, yeah.
Yes, that's a cross. Major currency pairs are pairs that has the US dollar in them. Now we have major currencies. We have about 8 major currencies. Now, major currency pairs must be a combination of the US dollar and one of those major currencies. Now, cross currency is a combination of is a mix of how do I put it? Okay, the last one I forgot when I was talking. The last one I forgot when I was talking about. The last one I forgot when I was talking about majors was USD JPY. So when you see GBP JPY, that's a cross, but both are still major currencies. You understand? So now major cross currencies is without the US dollar. They're a combination of the major currencies without the US dollar. So when you see Euro GBP, that's cross. When you see AUD NZD, that's cross. You understand? Since it doesn't have the US dollar in them. So yeah, there you go.
Thank you very much.
Always a pleasure. All right. So that will be. Should I take one more question? Okay, I'll take Mr. Michael. Mr. Michael, you've been allowed to speak. Kindly tell us where you're tuning in, where you're joining us from.
Good evening, sir.
Good evening, sir.
This is Michael from Nigeria, Lagos State, to be precise.
Okay. All right. Nice to have you with us.
Thank you so much for your weekly analysis. It has really been helpful. So hoping to join your mentorship soon.
I appreciate that.
Yes, sir. Please, I came in late. I don't know. Can we get the recorded version of this video, sir, please?
Yes. It's been recorded, so it's going to be available tomorrow morning.
Thank you very much, sir. Thank you, sir.
It's a pleasure. Yes, sir. All right. Yeah, so that's how far we can come. And for those because I'm getting a lot of DMs about our next mentorship, is going to be announced. By the way, it's actually 17th of March. It's going to be starting 17th of March, but we'll talk about that later. Today is just to provide value. All right. So thanks to everyone that tuned in. I see Mr. Tashmosh hand up. Please, okay, I still have like 3 minutes. All right, I'll take Tash. That's if you can make your mic work. So you need to unmute yourself and go ahead and ask your question, Mr. Tash.
Good evening.
Good evening, Tash.
Can you hear me?
Tell us your name and where you're joining us from. Loud and clear, I can hear you. Yes, I can hear you. Yes, I can hear you. I can hear you, Tash.
Yeah, how are you, man?
I'm fine. I'm good.
I'm from South Africa. Thank you very much for your weekly analysis. You've made, for me, you're making the analysis very, very simple, if I may put it that way. My question is, I can see that your entries are on 4 hours, and my concern is that your risk becomes too wide. Now, is it possible, will this strategy, the entering strategy, work on a lower time frame, where maybe I'll be looking for a bullish engulfment like you are using on the 4 hour, just to at least make the stop loss a little bit thinner?
Okay. That's a nice one. That's a nice question. So first of all, when it comes to the value of the stop loss, you get to decide that. Now, this is one thing that many people probably don't know, right? Or but I don't know, maybe we don't look into it sometimes. But this is the way I trade. I don't trade based on the value of my stop loss. What I mean is, of course, I have a strategy that I teach in the mentorships and all of that. My day trading strategy must not be bigger than 20 pips, blah, 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 blah. That's different. But when you're putting a stop loss, I don't determine, okay, let me put it this way. I use risk management calculators. I don't even look at lot sizes. When I go into every trade, I go in based on the percentage I am willing to risk on the trade, a percentage of my account, not the wide. Because if I'm swing trading, which this looks like swing trading, looks more like swing trading because it takes time for it to play out. So I don't go, even if my stop loss looks like this, I will still be risking, for instance, let's say I'm risking 1% per trade. I will still be risking 1%. If it's like this, I'm still risking 1%. If it's like this, I'm risking 1%. So I care less about the size of the stop loss. So if it's like this, I'm risking 1%. It doesn't change if the stop loss is this wide. It doesn't change for me. It's still 1%. You get my point. So so I go into trades based on percentage, not based on because when personally, from personal experience, I realized a long time ago that when your focus is on your stop loss, you make mistakes. You know why? If ideally, because I usually mention in my mentorships that make sure your stop loss is where it should be. Do not compromise your stop loss. If I am getting in above here, my stop loss has to be below. Why do I even have this zone in the first place? I have this zone because I am anticipating that I don't want to see price break below it. So that automatically makes that area the best area to hide my stop loss. So if I am betting on the idea that I don't want to see price break below this zone, then why should I now put my stop loss above the zone?
No, I
just because I don't want to use a wide stop loss. So rather than doing that, I will put the stop loss below the zone. I place the zone there for a reason. Because at the point of placing that zone, I was betting on the fact, on the idea that I don't think price, of course, price can get there. Don't get me wrong. But at that point, my mindset was, I don't want to see price come here. So if that is the point, then that's the best place to put my stop loss. You understand? So I care less about the distance of the stop loss. I just care more about the risk I'm putting on that particular trade, and then let the trade just play out.
Okay. No, I understand. I was going to have a second question after this one.
Yes,
but
go ahead.
now I think you have answered it already. I was going to ask, you see with the first entry on this example,
yes,
we took a trade, we won it. After winning it, the market gave us another higher high, right?
Yeah.
We put our level
Correct.
there, and then there's a pin bar that goes straight to our area of interest. Do you see that?
The first trade, are you talking about the first or second or third?
No, I'm talking about after the first trade, before the second one, after the first trade.
Okay.
In between there.
Okay.
Do you see after breaking that level, after creating another high?
Mm-hmm.
We have a pin bar that came down straight to our area and went back up, creating a bullish pin bar.
Are you talking about this?
No, you are way behind. Not that one.
Are you talking?
No,
okay.
Not that one. Yeah. Come back a little bit. Another. Back again. That one.
Okay.
You see, I think if you are using a lower time frame, you would get a trade and entry there. That's why I was saying
yes.
I have a second question, but now because of your explanation, I think I have been answered already. Because if you are on a lower time frame, you would see that as
get an entry there.
Yes.
I agree. That's true.
Yes.
That's true.
But because
so
of
that
your
was why earlier,
I think I'm fine.
Okay, so that was why I mentioned earlier that you can experiment this on other time frames. So for this particular webinar, I started with the daily, then down to the 4 hours. So when you are testing this out, you can also test 4 hour, then 1 hour for entry. So you can also try that out and see how it works, So just try play different scenarios, see how it works, then adopt the one that works best for you,
Okay. All right. Thank you very much.
Actually, why I use the 4 hour is because for those that may not be consistently profitable yet, to reduce the noise on the lower time frame. Because personally, I trade on the 15 minutes time frame if I'm actually using my day trading strategy, right? I draw inspiration from the 4 hours. I get in on the 15 minutes, but a different strategy, not this market structure, blah, 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 But for the purpose of today's webinar, I did this just so that because the higher the time frame, the more reliable the signals. But when you start going down to way more lower time frames, which 95% of traders that blow their accounts actually want to do, and that's why they don't end up making profit, because there are lots of noises on that lower time frame. They get stopped out even if they are right about the direction of the market. You can imagine that. So that's why I said, okay, you know what? I want this webinar to be an effective one for those that wants to go and apply it. That's why I stopped on the 4-hour time frame. Using the same strategy, this market structure strategy, I could go to the much lower time frame and still make it work. You know.
No, yes. Okay. Thank you very much.
Oh, you're welcome. All right. Yeah. So that's how far we can go. I still see some hands raised. Forgive me. We still have another webinar, same time next week, same day, same time next week, on a different topic. But I will take questions from today's topic. You know, maybe the first 10, 15 minutes. I'll take questions from today's topic before we jump into and whatever topic we have scheduled for that date. All right. So our time is fast spent, and I don't want this recording to be too lengthy for those that will be rewatching later. So that's how far we can go for today. Thanks for tuning in. I really, really do appreciate everyone that took out time from their busy schedule to tune in. And I'll see you next week, same time. And for those that tuned in late, the recordings is going to be available tomorrow morning, my time, of course, so West African time, and it's going to be available on YouTube and on the Telegram channel. Thanks once again, and have a fantastic night rest. Bye, everyone.